Now, speaking of inflation, it rose 8.5% in July, less than expected, but still the highest it's been since the early 80s. Experts indicate the pressure of inflation is starting to ease a bit, and we want to chat this morning with local financial professional Matt Stevenson from, Matt Stevenson, yes, sir, from Allied Wealth. Mr. Stevenson, good morning. How you doing?
Good morning. Doing well, Owen. Thanks for having me.
Great, great. Appreciate your time. What did you think of this latest inflation report? What did it reveal?
Yeah, so a little bit of good news, bad news with that report, Owen. The Labor Department released its latest report here for July. Good news is the Consumer Price Index that tracks inflation did go down. It went from 9.1% back in June to the 8.5% for July. But the other side of that coin is there's a common misconception that that means inflation and prices are dropping. But what that number really represents is that inflation is just simply growing a little bit more slowly than before. But with that being said, we are seeing some positive reaction out of the stock market in the hopes that the Federal Reserve can rope inflation in here before too much longer.
Yeah, we've seen these rate hikes coming and coming. What's your view on that? Do you think the Fed will make another interest rate hike given the inflation rate not dropping?
Yeah, so the Fed has been pretty aggressive. They've raised rates 4 times already here in 2022. We're at 2.25 on the Fed funds rate, and I'm expecting several more rate hikes throughout the year. The main goal that the Fed has is to get inflation back to that 2% target rate. Certainly, we're a long way away from that. But even though interest rate hikes make borrowing more expensive, the goal is to slow down spending and cool those inflation rates. The latest numbers from the CPI rating show that the Federal Reserve is having some positive reaction, but we still have a lot of other issues. The conflict between Russia and Ukraine. We still have these ongoing supply chain issues due to the pandemic, and that's really going to have an effect on how long inflation stays high.
And you know, I mean, you know this with your work with families and their finances, that we're all feeling the pinch from, you know, whether it's gasoline, electricity, groceries. What kind of advice are you giving to your clients to just kind of help them stay in budget? Because we can't stop saving completely if possible, right, and forget the long-term picture.
Exactly. So there are several things that we can do and that we talk about with our clients at Allied Wealth. First and foremost, let's review your budget. Certainly, you're paying more for almost everything right now, and that means last year's spending plan is probably not going to work for this year at the moment. Inflation's causing you to spend more than you earn in a lot of cases. We definitely need to review your budget ASAP. There might be some way to cut costs. You think about all these streaming services you may have. Maybe we pause on that extra vacation. If you travel to work, maybe you can carpool with a coworker. Comparison shopping is always a good idea, especially for things like those subscription services, utilities, internet. There might be an alternative service provider that offers the same level of service for less, just to make those dollars stretch a little bit further. There are a lot of rewards programs, bulk stores like Costco, Sam's Club. Sometimes you have to pay up front to join those clubs, but they offer plenty of deals on those essentials and even some price cuts on gas. But for a lot of our clients, it's important to, with the retirement plan, stay invested. With an 8.5% inflation rate, that means your dollar has lost 8.5% in value year over year. And that's a loss you're never going to recover from with savings alone. There's a lot of uncertainty on Wall Street right now, but historically, stocks remain one of the most likely ways to beat inflation in the long run because of the potential for those long-term gains. But a good financial strategy does not let this short-term volatility impact our longer-term approach. And a lot of what we do with our clients at Allied Wealth, Owen, is we focus on minimizing market risk with outcome-focused planning. And the main goal is to take these emotional decisions with inflation, interest rates. We want to take that off the table as much as we can to make sure that we stay on the right track.
In terms of, I hear this with the stock market a lot of the market's down, it's a buying opportunity, this and that. In your opinion, does inflation change the price of stocks? I mean, are stocks, just like groceries and everything else, more expensive because of inflation, or what's the relationship there?
Yeah, so there's certainly an impact there. The stock market certainly reacted negatively on inflation and a number of variables here this year. But historically, the stock market tends to do pretty well in high inflation environments. The key is using all the tools at your disposal, whether it's stocks, commodities like oil and gas has done quite well in this environment, but being able to adapt to that situation when the time arises, that's what's most important.
I'm just looking at the one-year inflation chart, and you were looking, from month to month, and we're sort of maybe we've hit the peak. Do you feel like we've hit the peak, and now it's going to be, incremental slowdowns, maybe 8.5%, 8%, 7.5%? How does this return to 2.5% or whatever actually happen?
Yeah, this is the crystal ball question, Owen.
Yeah.
I've been looking into my shattered crystal ball and trying to get an answer to that. It's hard to predict where inflation goes from here, but we're seeing some light at the end of the tunnel. The Fed is being aggressive here to combat this. I think that combined with some easement on the supply chain issues that we've been seeing should help inflation subside going into mid to late year 2023.
Okay, well, we'll see what happens. Appreciate your insight as always. Matt Stevenson, financial professional at Allied Wealth. Good to chat with you again, Matt.
You too, Owen.
Okay, have a great day. And good luck to everybody out there.